Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. As South Korea's political landscape remains mired in uncertainty following the December 3rd martial law crisis and the prolonged impeachment proceedings against President Yoon Suk Yeol, concerns are mounting over the potential economic fallout. From a volatile Korean won-U.S. dollar exchange rate and rising credit default swap premiums to downward revisions in GDP growth forecasts and rising food prices, the ripple effects are being felt across financial markets and consumer sectors alike. So what exactly is driving the economic instability, and how will the impeachment verdict impact the markets? For answers to this, we invite Yang Jun-sok, professor of economics at the Catholic University of Korea. Welcome, Professor.
Happy to be here.
And also joining us online is Park Min-jung, professor of business administration at Kumo National Institute of Technology. Great to have you, Professor Park.
Thank you for having me today.
So let's start with Professor Yang. So the political turmoil triggered by the impeachment crisis has lasted for over 3 months now, intensifying economic instability. And notably, the won-U.S. dollar exchange rate has surpassed the 1,470 mark again after more than 50 days and maintained such level for the second day. What are the reasons for this increase, Professor?
Okay, I think there's a mixture of long-term, medium-term, and short-term reason. The long-term reason is that Korean demographics are making the growth rate slower, and that is perhaps reducing some long-term investment credibility in Korea. And then the medium-term problem is the Trump risk, even though it's coming up in a couple of days now, but the increased tariffs and possibly reduced exports have the possibility of reducing Korea's ability to repay any borrowing in U.S. dollars for the next year or two. And then there's the short-term reason, which you mentioned, which is the political factor. The political chaos does make investors very nervous. I think it is very telling that today, when we had the announcement that the Constitutional Court will announce their ruling on President Park, there has been some strengthening of the Korean won. So I think once we have the Constitutional Court ruling, some of that short-term of weakness may disappear, but we still have the Trump risk in the medium term and the slowing growth and aging population in the long term. So we may see some strengthening of the won, but the trend for the long term, at least for the next couple of years, may be continual weakening, though perhaps not. Perhaps we will get somewhat better than the current level of 1470.
Mm-hmm. So we're seeing global and domestic uncertainties converging to this situation. Now, this exchange rate is expected to fluctuate further depending on the impeachment verdict of President Yoon Suk Yeol, many say, and this is set for Friday this week. And there's speculation that along with ripple effects of Trump's tariff imposition, the rate could break the 1,500 won mark. Professor Park, what's your outlook on this?
Yeah, the Korean won is now highly responsive to both political developments and external economic conditions. In the context of President Yoon's impeachment proceedings, investor sentiment remains sensitive to institutional stability, and the ongoing process introduced volatility into the foreign exchange market. However, since the Constitutional Court has already set a date for its ruling on this Friday, political uncertainty is expected to be resolved within a clearly defined timeframe, thereby limiting the duration of market instability. We actually have seen a similar situation in the past, especially during the impeachment of former President Park in the past. At the time, we also saw the won depreciate moderately as markets sold safer assets. However, once the Constitutional Court delivered a clear and decisive verdict and political continuity was restored, the exchange rate gradually stabilized. And also comparable dynamic could unfold now. So regardless of the outcome of this Friday, the resolution of uncertainty, especially with a set ruling date, will likely have a stabilizing effect by enhancing predictability and reinforcing market confidence. That said, in other words, if unforeseen complications arise or the political environment becomes more fragmented before the ruling, or the pressure on the currency could temporarily intensify. So regarding the speculation that the exchange rate could exceed over 1,500 won per dollars, we can believe that scenario cannot be ruled out. However, it will likely result from a combination of internal and external pressures. So also furthermore, these days, the Trump administration now back in power and also actively pursuing tariff-based trade policies, in turn could lead to dollar appreciation and renewed stress on emerging market currencies, including the Korean won. So it can be concluded that, and finally, we can also resolving domestic political uncertainty is an essential step. It may not be sufficient on its own. So continued attention to global macroeconomic trends and constant be crucial in stabilizing the Korean currency going forward.
Right. And this prolonged impeachment situation, there are concerns about the possible downgrade of the national credit rating, of course. And it's reported that the credit default swap premium, which reflects national external credibility, is rebounding. Professor Yang, what is the current situation about this? And how could increasing credit risk impact South Korea's economy?
Okay, well, I mentioned the long-term, short-term, and medium-term risk in the last question. That applies to here as well. Right now, Korea is facing a lot of uncertainty about its near-term politics, its medium-term trade, as well as long-term growth. And that is also magnified by the uncertainty in the global economy due mainly to the uncertain aspect of what Trump administration is going to do, not only for trade, but also global finance and macroeconomics. We don't know how he will handle continuing budget deficit in the United States. We don't know if he will drive the inflation upward. So this is all basically uncertainty that is adding to the Korea's difficulty with the risk premium. Now, what would happen if Korea's debt rating goes down? Well, if Korea wants to borrow money from abroad, not only the government, strictly speaking, the sovereign credit rating only applies to the government borrowing, but it likely will raise private borrowing costs for Korean firms as well, and that will cause more burden for the Korean companies as well as Korean households, since they're indirectly affected by the foreign borrowing rates. And if the interest burden goes up, and especially because Korea's corporate and household debt is at such high levels, the increasing interest burden may likely slow down the recovery even further, because the households and corporations will have less money to spend, to consume, and invest. So the decline in Korea's sovereign credit rating is going to slow down Korea's recovery. And even if the Bank of Korea decides to lower the interest rates, that might not affect the market rate as much, because the market rate will be affected not only by the Bank of Korea's policy rates, but also international borrowing rates.
That's certainly concerning, especially with global credit markets watching Korea closely. Now, alongside the rise in CDS premiums, overseas institutions are successively lowering their economic growth forecast for South Korea this year, and some even predict that the growth rate could fall to the 0% range. Professor Park, what are the possible countermeasures to overcome declining economic growth?
Yeah, the recent rise in Korean CDS premium signals growing investor concern over countries' perceived credit risk. often triggered by a combination of domestic political uncertainty and global economic headwinds. In power, major overseas institutions have revised their economic growth forecast for Korea downward. While such projections are not yet consensus, they reflect a cautious outlook on Korea's export performance, domestic consumption, and also investment sentiment. To counter declining this growth of Korea must adopt a multi-pronged policy response that balances short-term stimulus with long-term structural reform. To achieve that, the first, in the short-term perspective, targeted fiscal support is essential. And this includes investment in infrastructure, digital transformation, and also green industries, which can stimulate job creation, which can align with long-term competitiveness goals. And also, fiscal spending should be efficient and focused on sectors with high multiplier effects. And furthermore, secondly, monetary policy should remain responsive to economic conditions. While inflation remains a concern, real interest rate levels must be evaluated in light of weakening consumption and business investment. There may be room for selective easing or liquidity restoring, particularly for SMEs and vulnerable sectors. So also restoring investor and consumer confidence is also a crucial factor. This involves ensuring policy stability and reducing regulatory uncertainty and maintaining transparency in governance. Finally, structural reform should not be neglected. It means enhancing labor productivity and encouraging innovation and improving demographic resilience through alternative immigration and family support policies will be a key to policy factors.
Now let's shift gears a little bit. The food and restaurant industries are continuously raising prices, and this is contrastly with the same period of last year when prices hikes among food companies were kind of rare. Professor Yang, what are the reasons behind such rising food prices?
Okay, well, if you take a sort of a longer term picture for about 5 years or so, then we had the pandemic, and because there was so few demand for takeout food, I think that kept the prices down. And because the prices were kept down throughout the pandemic period, a lot of the price rises that we have seen in 2023 and part of 2024 was just the restaurants and these takeout places catching up to where the prices should be. Part of that, I think, is the continuing rise in labor costs. Even though we tend to think of restaurants and takeouts as mainly food, part of their biggest costs are probably labor costs rather than food costs. And then the food costs have been rising in the last 2 or 3 years, mainly because of the volatile weather and climate change that we've seen. That's probably going to continue, and that's affecting the vegetables and some meat products that are made domestically in Korea. But a lot of Korean food are imported, foodstuffs are imported, and that is being affected by the exchange rate as well, because the Korean won has dropped considerably in value over the last 2 years. So all these factors are causing the food prices to go up. But another factor that I think should be considered is that, well, if the government, usually the Korean government tries to keep a lid, limiting the increases in the prices of what they consider are important products for Korean consumers. And sometimes they pressure these companies into not raising prices. But then when there's a good reason to raise prices, or if the government pressure lets up, the companies making foodstuff take the opportunity opportunity to raise the price as much as possible because they know that once the government goes back into a normal situation, they will pressure the companies to not raise prices again. So they have to raise prices when they can to the maximum level possible. And I think that's also part of what we're seeing here because of the rise in imported food prices, because currently there is a sort of a political chaos. I think the pressure to keep the prices down have been let up somewhat, and that is also helping the companies to use this opportunity to raise the price as much as possible. But I have to say that this is not necessarily a bad thing because, well, in order for companies to remain profitable and provide jobs, they do have to keep up with changes in prices when there's an inflationary pressure. So I think this is sort of a second best solution to what we usually have, which is government trying to limit price rises and perhaps trying a bit too hard to limit prices so the companies and restaurants take opportunity to raise it when they can.
Right. So appropriate measures in terms of price caps would be necessary. Now, as also for the cause of this price hikes, some people criticize that the South Korea's political vacuum may have pushed companies to accelerate price hikes as well. Professor Park, what are your thoughts on this?
Yeah, these arguments that some companies may have accelerated prices hikes amid political uncertainty is now without precedent. In times of political transition or perceived leadership vacuum, market actors, particularly in illegal policy or less regulated sectors, can take advantage of weakened oversight or delayed policy responses. This phenomenon has been observed in various economies during periods of instability. However, attributing inflation solely to political dynamics would oversimplify this issue. Recent price increases in Korea, especially in consumer goods and services, are also driven by structural factors such as global supply chain disruptions, rising input costs, or energy prices volatility, and currency depreciation. These are macro-level pressures that companies respond to regardless of the domestic political context. So it can be that the perception of political vacuum can weaken government capacity to intervene decisively in markets, either through pricing regulations, anti-competitive investigations, or price monitoring efforts. In such cases, the government's role in inflation supervision becomes more reactive than proactive. To ensure this effective inflation control, the government must maintain continuity in economic governance regardless of political developments. This includes ensuring that inflation monitoring bodies operate independently and enforcing transparency in pricing behavior, especially for essential goods, and maintaining sort of open communication with the public about inflation drivers and countermeasures.
So more proactive measures would be crucial. Now, Professor Park, there are concerns that the inflation rates for processed food and dining out prices may also soon exceed 3%. What kind of countermeasures are needed for effective inflation control?
Yes, concerns about inflation exceeding 3% for processed foods and dining out prices reflect broader pressures in the cost structure of consumer goods. These categories are particularly sensitive to fluctuations in input prices, such as global agriculture commodities, energy costs, and logistics, and as well as exchange rate depreciation, which increases the cost of imported raw materials. So to effectively counter this inflation in these sectors, a targeted and coordinated policy approach is necessary. For example, price monitoring and transparency mechanisms must be strengthened, and also support for supply side stabilization is also very crucial. This may include temporary subsidies for essential food-related inputs, logistical cost reductions, and support for small businesses facing margin pressures. And also import diversification and inventory management can also play a very important factor as a role. So by expanding the sourcing of food and raw materials beyond a few countries, Korea can reduce vulnerability to global price shocks. Also, finally, inflation control should be balanced with the broader economic context and aggressive price suppression without regard for sustainability may lead to distortions or unintended harm to small producers.
Right. Now, as part of efforts to ease this burden on the public, the government has officially announced a supplementary budget of about 10 trillion Korean won. And this is the first time the budget authorities have formally declared such a move. Professor, what led to this decision? And also, why is it being called essential?
Okay, well, the supplementary budget was discussed because this year's growth rate is so much below potential growth rate. Right now, the potential growth rate for Korea is thought to be somewhere between 1.8% to 2.0%. But the government estimate of this year's growth is now about 1.5%. And a lot of people are saying that it will be lower than that. It may even be below 1.0%. So there has been discussions that supplementary budget is needed. The government, however, has taken somewhat of a agnostic point of view. The government has said that they will increase how much they spend. They will spend about 60 to 70% of their budget during the first half of the year. But if they actually do that, and if we see, say, Trump increasing tariffs on Korea, we'll probably have to have at least one more and maybe two or three more supplementary budgets in this year. So I think the case needs to be made that supplementary budget is needed, but the amount doesn't necessarily have to be that big. The big political controversy now is that the supplementary budget is only 10 trillion won. And a part of that will be used for the wildfires. The wildfires that we had last month was the biggest in Korean history, and that caused a considerable amount of damage, 6.9 trillion won worth of damage in the property loss. So the reason that we call it essential is that it's trying to address the wildfire damage as well as the slowing growth rate. But as I mentioned, if we have the Trump risk and if the budget spending comes out as the government plans to have most of the spending done at the first half of the year, we'll probably need to have more supplementary budget in the second half of the year, which means I think it's better to have a smaller amount hit very quickly in the economy rather than delay the supplementary budget so that they can make it bigger.
Right. So the amount, rather than the amount, it's really important to target what's really needed, and we could see more supplementary budgets coming in. Now, as always, the key will be on how the government will react in the coming weeks, and it will be crucial in shaping public confidence as well as economic stability moving forward. Now, we'll have to wrap up our discussion at this point. This will be all from Within the Frame. Professor Yang and Professor Park, thank you so much for your insights tonight.
Thank you.
Thank you.
Now, that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Until then, stay informed and engaged.